part of our job is to help clients mitigate risk. And so it's more than just the insurance policy. It's what are the resources that we can bring to the property level to help them mitigate risk and plan for events such as wildfires. A steady hand is someone that you can absolutely 100% depend on to be there when you need them and even when you don't think you need them.
Thank you for joining us for this session of Fall Predictions 2023. This session will be focused on the grape and bulk wine market, both international and domestic. We have Greg Livingood here, as well as Johnny Leonardo from Ciotti, who are going to tackle these two issues. Please remember that, as usual, we'll have a live chat in the chat room here. So if you have any questions for the speakers during the presentation, don't hesitate, just put your questions right in there and they're available live to answer the questions as we move forward. Okay, without further ado, I'm going to kick it over to Greg to talk about the international bulk and grape wine market. Greg?
Kim, thank you very much for that. I am Greg Livingood, president of the Ciotti Company. Both Johnny and I are very excited to be here today talking about grapes and bulk wine, both domestically and from an international perspective. My job is to kick things off with the international look on what's happening out there. So I will start that by talking about a little bit what's happening on the supply side internationally. For those of you that don't know much about Ciotti, we are a company based here in the U.S. Our main office is here in Novato, California, but we do have 9 offices in other countries around the world, mainly in the larger supply regions in South America, Europe, South Africa, and Australia. But we also have sales offices in Shanghai in China and also Niagara in Canada, which are focused on selling bulk wines from California and all these other regions throughout the world. We do have these brokers gathering all this information that we talk about here today. Okay, so I'm going to go through the global supply trends, as I mentioned, start with the production, take a quick look at what's planted out in the world today, what those vines are creating from a production standpoint. We'll look at the bulk market, what's selling, what's not selling from an international perspective. We'll talk about issues we've faced in international trade recently, both in transportation, trade disputes. There have been lots of obstacles out there since even before COVID started. So we'll go through some of that. And then finally, I'd like to bring it back and talk about the local impact of global wines and international wines and what that impact is on our market here and what the future might look like for us in this wine game. So let's start here. This is an OIV slide. Let me start by saying that it's basically the vineyard surface area currently out there around the world. It isn't a perfect slide, as an example. California is a voluntary number, so they try to figure out the trends and where things are going. As you look at this is in millions of hectares. And I think the thing to look at here, well, and the second thing I would mention, these are vineyards planted, including table grapes, concentrate grapes, and table fruit. So it's not just wine grapes here. As you look at this, there's been slight decline over the last 20 years in overall plantations. We've seen vines come out of the ground here in California, but we've seen it happen in Europe and other places as well. So as we look at what's happening from a global demand side, we realize that we're not seeing a big expansion of vineyard surface area. If anything, we're seeing a slight contraction at this stage. Now, all these vineyards are in these are the main regions where you see these vineyards. Again, not just wine grapes here. We're talking about table fruit, raisins, concentrates as well. And that's why when you look at these numbers, you see China and Turkey bounce up in there because they have a fair amount of those table grapes as well. But the big players in the wine business or in wine production would be Spain, Italy, France, and then U.S. Behind that. And then Argentina is also big in concentrate. So Chile's actually ahead of them. But those are what we would call the big five, and that's where the vines are today, and that's where most of the production is coming from. And this is what the global production line kind of looks like. Again, this is the last 22 odd years. The last, the dotted lines there on this OIV slide are basically those are estimates based on preliminary numbers they've received from all the countries. The big thing to look at here, I think, is going back, we're kind of right back where we were in 2002, 2003, 2001. Not a huge change from a global perspective on where we are with what's produced on an international level. Big number there to look at here is this 2018 crop, which I'll show you some more detail of that on the next slide. That was just a really big crop globally. It was very big here in California as well, and it certainly put us into an oversupply situation here, but it did the same for some other markets. Extending off 2019 and beyond, you can see it's somewhat flattened out for the last 4 years. We expect that to continue to some degree, given the fact that we're not seeing a lot of planting going on out there. This slide here is actually something we do at Ciotti. We take all the numbers we can find. Most of those numbers coming from OIV, like the numbers I just showed previously, those are all liquid volume numbers. So we have to get them back into metric tons to show what the tons are. If you look at this slide, you can see the California and Washington numbers might be a little bit different than you expect. Just want to point out, those are metric tons. Those are not US tons. That's why they look a little bit smaller. But the big thing I like to look at here is just kind of trends of these different countries and what they're doing. If you look at Argentina at the top, they seem to be kind of heading sort of into a decline situation overall from a production standpoint as they've abandoned vineyards and pulled vines out of the ground. Chile had a huge crop in 21, dropped back a little bit in 22, but they've been kind of on a steady increase going back to the early 2000s. Then when you look here at France, Italy, and Spain, I always like to point out this number, between those three countries, that makes up about 50% of what's produced in the wine world. So whenever we're talking about global numbers, it's always important to put into perspective that the big three are about half of what we do. And then finally, California slips in. We're about half the size of Italy at number 4, and then Chile about half our size at number 5. And then when you look at 2018, I mentioned this was a huge crop globally. It was almost 41 million metric tons. 36 is where we've been ever since. 36 has been somewhat sustainable, if not slightly long. So it's those big crop years, just like it is here in California, that tend to throw things into oversupply, and that's what happened in 18. COVID certainly helped in some ways as consumer demand increased for a short period of time. It helped eat up some of that volume, but we're still long in certain markets. If we just look at the big five and how they did from last year to this year, Italy was fairly flat. France, it was up huge, but keep in mind it was up huge off of a very small crop in 21. And again, Spain down slightly. California expectations are to be up slightly off a small crop last year. Chile was down 7%, but again, it was off a record 21 crop for them. So with all of that, there's some ups and downs and sideways here, but the reality is, as I showed you on the previous slide, we're pretty flat overall in overall production. Moving into the global marketplace with that production, that flat production, we are seeing some markets though that are either headed towards long or they're already very long. And one of those markets in particular, Australia, has experienced a very steep decline in price. And for them, it was a little bit of a double hit. They had a very large record crop in 21. At the very same time, they were losing a tremendous amount of demand from China. Australia and China have a free trade agreement, but they did have some issues in 2020. Political issues, which caused for China to put some severe tariffs on Australian wine, which essentially killed the market for Australia. And it was very, very difficult for them and continues to be. And I'll talk about that in the following slides. In addition to that, Chinese demand, starting with COVID, has really dropped off. There was some estimates out there, and it's hard to kind of get a handle on all the numbers coming out of China, but there's estimates out there that somewhere in the neighborhood of 70 million cases worth of demand have essentially disappeared since COVID started. So that's very, very concerning to those looking to keep the global market in balance. As we look at all of this stuff, currency exchange is a big part for importers and exporters. We've had the strongest dollar in years, which has been good for importers. On the one hand, it's helped them with a little more buying power for the wine side of what they're doing, which is really just balanced out a little bit of some of the inflationary issues they're facing with freight and other items. But it's been very difficult for our exporters. Our bulk exporters already face some difficulty competing out in the world because our wines, quite frankly, in general, in the bulk market, are more expensive than most of our competitors. So our exporters are selling on quality, and they're selling on the concept of California and all of that represents. A strong dollar does not necessarily help them, so they've been facing that for the last couple of years. In addition to that, we've had a few trade wars that we've been through. It's kind of going back to the Trump administration era and some issues we had with both Europe and China. You may remember there was a trade dispute that's still ongoing in between Boeing and Airbus over subsidies and things like that. And so we put 25% tariffs on some wines from the EU, specifically France and Spain. Those tariffs have since been suspended in June of 21. They did suspend those tariffs, hoping to continue talks to fix their airplane issues. But that suspension ends in June of 26. So that's something that needs to be on our radar. That was very, very significant. When you look at import numbers post-tariff, you can see the wines from those countries really, really dropped off in volume coming this way. In addition to that, I mentioned we had some issues with China. That was more over steel and some other products. And they put a 90% tariff on all U.S. wine. That's still there. We're up against, when we're trying to build that market, we're up against Chile and Australia, who have free trade. Australia is now sitting with us kind of in the penalty box. They unfortunately had 200% tariffs imposed on them for their political fallout with China. And their issue has a sunset on it 4 years out there. But these things are big disruptors in the market. It makes it very, very difficult to plan and do things when you have these kind of tariffs popping up and disappearing. In addition to those types of issues, we've had a big problem with transportation over the last couple of years. So going into COVID, I think the biggest issue we saw during the heart of COVID, during lockdowns and all of that, is South Africa completely shut down. The government made it illegal to even ship alcohol on the highways during COVID and the lockdowns. But the real issue happened kind of as we came out of lockdowns and businesses reopened and manufacturing began again. There was a huge backlog of goods sitting in China that needed to move. So in response to that, the big freight companies took ships out of their traditional trade lanes coming from South America to the US or going to Europe, or from Australia, South America, South Africa, Australia, all coming to the US. Those all moved to China, and they all went into the China-US trade lane or the China-Europe trade lane, which made it extremely difficult and expensive to get wine out of pretty much all of the producing regions of the world. And just to give you an idea of what that looked like from a pricing perspective and how painful that was for importers and exporters, pre-COVID, it was about $3,000 per container from port to port for a 20-foot container, 24,000 liters, 6,200 odd gallons, which is about 47 cents a gallon. That's very manageable for buyers. It's a part of the cost, but certainly not overwhelming. In 2022, the pricing jumped dramatically. 12,000 was kind of an average price. We saw it go up to 16,000 for a short period of time. But now you're talking $1.90, $2 a gallon for freight, which is more than the cost of the wine, and that made it very, very difficult. South Africa benefited from that a little bit because they, for some reason, were able to really just almost hold their price. Their pricing doubled, but it didn't go up 4x. And so at 94 cents a gallon, it became very attractive, and we saw buyers go to South Africa that wouldn't have otherwise tried South African wine, just because the freight was cheaper and more readily available. So coming back to today, things are kind of jumping back to where they once were, and so pricing has come way down in transportation. Boats are back where they were before, and so we're back to 57, 70 cents a gallon to ship from most parts of the world. And the other side of this, the transit times have dropped dramatically. We were looking at, in some cases, it was taking 3 months for a box to leave, or a box of wine to leave Chile, and it was 3 months before it arrived here in Oakland for the buyer, which is very, very difficult. One, from a cash flow perspective for the supplier, and two, from a supply chain and quality issue for the buyer. It was not good. But now we're back to the old days where it looks like it's 3 weeks, 4 weeks of transit time, which is what most people expect. So given those issues and given what's happening around the world, what is selling right now, Australia is the hot market as far as activity goes. The downside for them is they're selling a lot of stuff. They're basically selling it to get it out of the market so they can bring in the next harvest. As mentioned, they had a very big harvest in 21, more reasonable in 22, but with the Chinese exiting their market altogether, their red wine market was built for China. And so they have extremely low prices right now in China for red wines. The flip side of that is they do have a lot of Pinot Grigio, and they have a lot of Chardonnay. So you have buyers going there, one, for the great deals in red, but also for the wines that people need on the white side, which are fairly high demand, especially in North America right now, being Chardonnay and Pinot Grigio. The net effect of all of this is, there's no new demand. They're taking business from other places, and probably the country that's taken the biggest hit in all of this has been Chile. They were moving a lot of wine to the U.S., Cabs and Merlots, but they've lost some of that volume. They continue to sell Sauvignon Blanc and Pinot Noir into the U.S. Those are very strong items for the U.S. from Chile, and that continues to be good. But other reds, they've certainly lost market share to Australia, all as part of the fallout of this Chinese deal. Now, most people felt that they would pick up a lot of business in Chile from China once China moved out of Australia, and there was some incremental increase, but it wasn't enough to offset what they're losing in North America and Europe on the other reds. And then here in the U.S., from an export thing, it's also slowing. Sales have been tough there. As I mentioned, the dollar's tough. Transportation was especially difficult for us to find containers and to find space on boats to ship wine to Europe and other markets. So it's a bit of a tough spot right now for U.S. export. I want to go through 4 or 5 very quick varietal slides here, just making some quick points on, apples to apples. What does pricing look like here in the United States for importers or wineries buying bulk wine from overseas? I mentioned Pinot Grigio is very strong right now in the market. Didn't have a huge crop here in California. The pricing is somewhere in that $7 to $8 a gallon on the spot market. But if you're buying from Chile or Australia, you can land it here. There's no duty from either country, so you're at $3.80 from Chile, $4 Australia. Not quite half the price, maybe of the low end of California, but there are some programs, CBMA program, duty drawback program, where you can actually get some rebates for somewhere in the neighborhood of 90 cents a gallon from selected importers, and depending on what you export. But in some cases, these wines are you're closer to $3 a gallon than $4. So it's very compelling when you're an importer and you're selling wine at the $4 a bottle equivalent, whether that be in the bottle or in in some other alternative packaging. The pricing is very, very attractive for an importer. Here we go with Sauvignon Blanc. Again, Chile's a big supplier there. Again, when you factor in all of the different rebates and things like that, it's about half price of California wine, and that's where you see a lot of that coming in and going into 3-liter packaging. Pinot Noir the same. Chile, it's almost identical to Sauvignon Blanc. A lot of volume going into 3-liter, and again close to basically half the price of the California wine. Merlot and Cab is where you start to see Australia jump into the game. As you can see at $2 a gallon, they're again, that's not sustainable, but that's where they are right now. And so you do see Merlot, Cabernet almost identical pricing. They're just very, very inexpensive given what they're facing over there. And so where does this wine go and how does this affect us? First of all, a lot of this wine will go into American appellation products. So there are a lot of wines out there that are labeled American, which means they're 75% California wine or 75% US wine and 25% imported. There's a lot of that takes place from wineries in Texas and other places where they have either American appellated wines or they have non-appellated wines. They're basically pushing the varietal. And in a lot of cases, they're using imported wine for that. And then here in California, or from our California importers, and probably where most of the bulk import goes, it ends up in alternative packaging, which means 3-liter bag-in-box, 5-liter, 1.5s, 187s, or cans. And the reason for that is those products are all kind of in the same section of the grocery store. If you were to put imported bulk into 750s, it generally ends up in a imported section off to the side and not in the varietal section. We want to as we want to be marketing in the Pinot Noir section, not the not the imported section down at the end of the aisle. So that's where we see a lot of that volume going today. On the export side for us, where are the bright spots? In the bottle, Canada is very important, but on the bulk side, UK is good for us. We've had brands there, California brands for many years. Echo Falls and Blossom Hill have been big brands in those markets. They've fallen off in recent years for various reasons, but they're sold, uniquely Californian. They sell California wine there rather than just selling the varietal and on price. Scandinavia, specifically Sweden, is good for us with Red Zinfandel. We sell a lot of Reds in there in various projects, and they again are buying the concept of Californian wines. And Asia, with the exception of China right now, Japan has been pretty good for some exporters, Korea as well. So China has been a little bit tough, as I mentioned, with the duties that we face or the tariffs we face. We're hoping at some point we can reestablish back into that marketplace. So the impact of all this stuff here is, the value end of the market, that $4 and under, and that's, for the most part, that's all supplied by import bulk wine. You can see from the prices I showed earlier, we're not going to get California growers, growing for long and trying to sell, $2, $3 wine. It doesn't work. The good news there is that our companies, our wine companies here are keeping that shelf space, and they're continuing to sell wine through those products. Hopefully, the idea is hopefully those people at some point that start there at that end are going to be buying $10 wine, which is going to be that when they start doing that, it's going to be more US wine, because they don't believe when they're looking at what they're drinking, they're not looking for Chilean Sauvignon Blanc or Australian Merlot. They're just looking for the varietal. And so as time goes on, as they start to move up the chain, we're hoping that they end up in California products. And then on the bulks part, the export bulk side, where we do see a positive impact, is I mentioned these drawback programs where you can get some tax rebates on imports. Well, in some cases, you need exports in order to get those import rebates, which causes for our big bulk exporters to try a little harder on pricing to go out and push into the export market in order to get those credits coming the other way. Which has proven to be somewhat successful, this program. So then finally on the impact here, I think it's probably more on the bottled side. You can see what the prices that we're up against, and we didn't go through some of the prices in Europe, but similarly very competitive. The bottled imports have grown steadily since the early 2000s, and import has become just a part of our wine lives here. Future outlook with all of this, I keep saying we need to keep pushing export. We've fallen way back in the last couple of years, and we need to reestablish that. It's particularly important for the Central Valley to get those exports going, getting those bulk exports going again. We know imports will be competitive, and they'll be here for the long term on the bulk side. They will continue to push and support the value end. Again, owning that shelf space is important. When we have a year like 2018, where we have this kind of big wave of wine come in, we'll need an outlet for those wines, as we did before. I mean, we're selling, some of the wines I was showing at $6 and $7 from California. Those were selling for $2 and $3, and in those years, we're going to want to have that shelf space in the hands of some California-owned companies. And then finally, on the outlook, if China can rebound a little bit from their zero COVID policy, that would certainly bring this market back into a little bit of balance. My final thoughts first here: California can't sell based on price alone. I mentioned quality several times. I'll say it again. We really have to sell on the concept of California quality, and that it's better than these other places. From a price perspective, we're not overly competitive in the bulk side of things. People always ask me, well, what does this all mean to me? Directly, it's hard to draw that direct line from either imported bulk or bottled to each region in California, Napa, Sonoma, Lake, some of these other counties out there. But the reality is we're all connected. Anytime something happens, there's a reaction. For every action, there's a reaction. You see that in this international wine business. There's a trade dispute in Australia. It affects China. It affects Chile. It affects the U.S. It affects everybody. So we really have to. As we're all connected, we just have to stay on top of what's happening out there in the world. And then finally, here for my bold prediction, maybe hopeful prediction, China and Australia are in fact now talking again. New government in Australia, they're talking about meeting face to face. My prediction is that they're going to sort out the differences that they have, and that then you're going to start seeing with the zero COVID policy going away, you start to see China reopen, that we're going to get some of that demand back that has been lost out there in the global market, and it will be very, very helpful to the global supply demand balance. With that's kind of my international report. So thank you for paying attention and listening. With that, I'm going to kick it over to Johnny Leonardo from Ciati as well, and he's going to talk about what's happening here in California. Johnny, take it away.
Thank you, Greg. It's always fascinating information globally to see not only the pricing differences between all the different countries in California, but to see how the inventory affects the whole situation in California. As Greg mentioned, my name is Johnny Leonardo. I am a bulk wine and grape broker with the Ciati Company. Today, I'm going to give you a brief overview of the California grape and bulk wine market. I'll start with my presentation. I'll start with a short summary of the overall market, and then I'll move to discussing the grape market as well, and finish off with discussing what the bulk inventory and bulk market looks like. I'll move on to some slides here. Now, there are several factors that affect the supply and demand balance of both grape and bulk wine market. The first one being the overall performance of bottled wine or of case goods. Current case goods sales volume right now continues to struggle a bit overall. The latest numbers show sales are down in terms of volume, and they're slightly down or flat in terms of value. But there is moderate growth in the premium segment, but the lower priced value in struggles. The premium segments, which really include wine bottle pricing above $10, but where you see the strength right now is in the $15 to $20 a bottle segment, as well as $20 a bottle and above. The value end, which is technically below $10, but really where we're seeing it struggle is more in that, lower end $4 to $6 a bottle product. Those sales have been decreasing. The off-premise growth has tapered off since the pandemic. During the pandemic, consumers were stocking up at the grocery stores. Many wine brands saw increased sales numbers, but those sales now have slowed down. Conversely, on-premise sales have increased because now restaurants are fully operating again. I think that growth is slowing down, probably to more of a pre-pandemic sales numbers. Another factor that affects the supply and demand of bulk wine and grapes both is the annual harvest. The 2022 crush, we feel, will be the third light crop in a row. So if you assume that an average crop is an annual 4 to 4.1 million tons in California, those 3 years there were below average. It was below average in most regions. The coastal areas seem to be hit the hardest. I think crop yields were closer to average, for instance, in the northern interior, depending on variety and individual grower, of course. But there was an early frost event there that may have shortened the total amount of that crop. The California bulk inventory today is higher at this point than it was last year. It looks like it's more of a demand issue, where we have a decent amount of 2021 bulk inventory on the market. Plus, we've had 2022 bulk wines that have hit the market. But really, the larger inventory is probably due more to slower sales, causing a backup of winery inventory as opposed to excess grapes that got harvested. There are pricing challenges for both buyers and sellers. In some cases, buyers are getting priced out of the wines they need, right? I mean, demand for those premium wines are high and inventories are low, which means the price for those wines has gone up. There's specific coastal demand that's strong, and the grape demand mirrors the bulk demand. The stronger sales in some coastal areas have depleted bulk inventories, so it's made available grapes scarce as well, as buyers start to look for future sourcing for those products. The opportunities are more challenging to find. I mean, the industry continues to get smaller, whether, consolidation is still, it continues, whether it's with wineries or distributors or growing operations. It leaves fewer windows of opportunity for sure. The economic concerns causing market hesitation with risk of inflation in general and unpredictable wine sales specifically, it makes it very difficult for wineries to have purchase decisions or buying decisions. Now, the California grape market, pretty typical right now with regards to early season discussions. I mean, January following any harvest is usually a quieter time with regards to grape contracting. There's a lot that happens. For one thing, it's tough to see anything in the vineyard. Vines are all pruned, as we've seen for the past couple of weeks. With the storms or whatever, sometimes you can't even get in a vineyard to look at it because they're muddy or there's full of water. Usually, activity will pick up after bud break. So when we start moving more toward the spring, March and April, you'll start seeing some more. But there certainly are discussions. The strongest demand right now, it's the early activity is limited to specific varieties in specific regions, mainly for more premium programs. There's good demand right now for Sonoma Chardonnay, for instance, whether that be Sonoma County, Sonoma Coast, Russian River. There's virtually no past vintage bulk wine available. There's very little current vintage bulk wine available. Plus, it looks like there was a smaller harvest in 2022. So buyers are already out trying to source for 2023 through grape contracting. Napa Cabernet and Napa Whites in general, pretty good demand. Again, there's low bulk inventory and there's big demand for premium programs. The buyers are willing to sign longer term deals right now for those needed varieties. Pricing discussed generally is higher than 2021, but the grower margins may not be, right? I mean, grower costs since last year have risen, or the last contracting year have risen, and they may be outpacing what the increase in the contract price is. In the interior region, it looks like white varieties are a little stronger than reds. As Greg mentioned, Pinot Grigio is a good example of that. May have been a lighter crop in 2022. It certainly feels that way. Again, less bulk inventory. And bulk inventory influences grape buying decisions. The whites in general are in more of a balanced situation with the bulk wines. However, it's important to note more grapes in the interior region have come out of contract and are available. This is a result of a lot of those grapes going into that value in that lower end bottle price that is struggling right now. Let's see, given economic uncertainties, buyers want to limit costs while growers are concerned about rising input costs, right? I mean, this is kind of where the pricing disconnect a lot of times is. It costs more to grow grapes. If contract prices stay the same and don't necessarily increase, then profits shrink. It becomes difficult for growers to be profitable. It probably is a good thing we didn't have a big crop. Having 3 shorter crops in a row like that has really brought the inventories in somewhat of a balanced situation. California bulk market. The bulk market over the last year, it's been somewhat subdued. I mean, the market was extremely active during the pandemic, with buyers sourcing for unexpected sales increases. In some cases, those buyers are now left with that inventory, or with that inventory that still has to move through the system. It's taken a little longer to move through than what they had anticipated. And that has to occur before they are buyers again. Activity for wines produced in the valley or interiors, pretty muted. I mean, as sales for some of the larger value price programs have slowed, those wineries just are not buyers of bulk wine. And in some cases, they're sellers, as we'll see in a moment here. There is strong activity for certain varietals in Napa and Sonoma Chardonnay, Sonoma Pinot Noir, Napa Cabernet. Again, I mentioned before, the grape market as a reflection of the bulk market. The same wines, same bulk wines are in demand that the grapes are in demand. And again, there's low inventory of those products. The market seems somewhat balanced, seeing some increasing demand in coastal wines given the shorter crop. Again, it seems like the crop was definitely shorter on the coast, and it has certainly affected the bulk wine market, and we see some price raises and lower inventories. Some bulk pricing trends. Valley bulk pricing, it's interesting. It seems to be holding, despite the fact that the market is a little slower in the valley. Prices do seem to be holding. Cabernet is definitely the longest in terms of inventory. Despite fewer buyers, pricing has not really dropped dramatically for most varietals, but deals are less frequent. The deals are smaller volumes. And there certainly is a large chunk of Cabernet that really the industry will have to kind of work through. And right now, that's a very slow market. Many larger wineries are sellers of bulk wine. Again, this is a result of slower sales on the case goods side with some wineries that have value priced programs. It also may be a result of oversourcing, so to speak, during the pandemic. A lot of wineries were working on large sales projections, so they had to prepare, not knowing when that was going to end, and they perhaps they oversourced, and now that wine's coming back onto the market. There is a ceiling on bulk pricing with uncertainties in the economy and thinner margins. Wineries may not be able to afford, in some cases, some of those premium products to go in their programs. I mean, the pricing, they might be getting priced out of it. Maintaining margins, buyers for some premium coastal programs may adjust sourcing strategy and move to a premium California appellation to stay profitable. This has happened in the past with some success. We've seen other brands do this to where they have a coastal program at a certain price point that's doing well. Perhaps it's even growing, but the inputs start to become too costly. So the way they handle that is to drop it to a California appellation, trying to keep the quality, blending in coastal wines, blending in California wines, but lowering their costs by going to a California appellation and increasing their sourcing opportunities as well. That way they can keep the bottle price relatively the same and be a little bit more profitable. Our next two slides here, I'm going to show you some graphs. This is a graph of bulk wine inventories that the Ciotti company represents. These are sellers that we know are selling wine, and they're in our system. This graph looks at kind of a snapshot of each month for the last 12 months, so starting in January 22nd. And I took basically the 5 main varietals, I guess: Cabernet, Chardonnay, Merlot, Pinot Noir, and Sauvignon Blanc, just to kind of give you an idea of the movement of wine in the total gallons of wine that, again, the Ciotti company represents, that's available. The millions of gallons are on the left-hand side there. You can kind of see where each bar lands. Immediately, you notice that Cabernet is, basically twice as much inventory as any other variety. That is the one that has the most inventory. It fluctuated through. It has fluctuated throughout the year, but it definitely is one that needs to work through the system. The other varieties look a little bit more balanced: Chardonnay, Pinot Noir, Sauvignon Blanc, for instance. Definitely better demand, good demand, and has worked through a little quicker than the Cabernet has. I guess it's important to note, it's interesting when you look at this, sometimes you see, like, I'll take March, April, May, June, for instance, with Chardonnay and Pinot Noir. Looks like nothing has really happened, right? 2 million gallons all 4 months, but it's important to note these are movements that you don't see from month to month. There's sales there's sales constantly, and then there's added new lots constantly. So a lot of times they even out to where it looks like it's staying the same. This next slide is interesting. It's the same 5 varieties as before, but this is a snapshot of every January for the past 5 years. And January is always a good indication of the bulk wine, because not only do you have past vintages in the system, but the newest vintage, for the most part, has come into the system as well. So now we're seeing, the good majority of 2022 wines in the system, besides past vintages like 2021. If you remember the slide before, you saw the Cabernet on the right-hand side. You see January 2023. You see the Cabernet total volume that we have in our system, a little bit above 5 million gallons. But it was nothing compared to 2019 and 2020. And as Greg mentioned, the main reason for that is 2016, 17, and Greg mentioned 2018 as a big year, not only globally, but for California. So big harvests. Those harvests were each one was 4 million plus total tons harvested in California. And that caused a backup in the system. By 2020, we had a tremendous amount of bulk wine, probably the most we've ever seen at one given time. But, in this industry, you never know what's going to happen. Big events in 2020 that kind of caused that to get depleted. You see the depletion from January 2020 to January 21 is tremendous. More than half of the wine got depleted. And in fact, we were short at that point. But in 2020, you had the pandemic, which caused the surge in bulk wine purchasing, but you also had the fires, right? There was a big surge in past vintage wine purchasing, like 2019's at that point, because there was a lot of uncertainty about what the quality of 2020 wines were going to be. And wineries were nervous about what they were harvesting. So they they wanted to source and protect themselves and just in case. And so a lot of past vintage purchasing at that point. So that really drew the inventories down by 2021. But then by 2022, you start to see this build up, this bounce back, and then even more so in 2023. And it's not necessarily due to large crops. That was just, it was so low to begin with that it was really necessary to get back to those inventories. And that's why we are in a relative balanced situation in bulk wine wise right now. Some final observations. Overall, again, the bulk wine market is fairly balanced. It's been relieved by 3 lighter crops in a row. Will there be unexpected inventory? Probably. There usually is. I mean, something will that's just how this market is. We don't anticipate a certain chunk of bulk wine available, and then all of a sudden a couple of wineries will put some available, and it will raise the total volume a little bit. But if sales numbers decline, we may see more inventories come on. I mean, a lot of it has to do with that. Sales projection challenges equal hesitant buyers. This is a common theme right now with many potential buyers. We constantly hear how purchase decisions are challenging, to say the least. Sales projections change constantly. I mean, it's not uncalled for to get a call from a potential buyer and one day, and then 4 days later, the whole sourcing opportunity has changed. Whether they go from a buyer to a seller or a seller to a buyer, just is constantly moving right now. Just projections are very, very difficult to determine. The revenue challenges, fighting for margin, many challenges that growers and wineries both face. I mean, some of them, just to name a few, obviously lighter crops. I mean, lighter crops affect the growers' profitability. It creates sourcing challenges for wineries. Lower prices, whether it be for grapes or for bulk wine, obviously makes it difficult to be profitable. Rising costs mean thinner margins, or a price increase needed for the final product, grapes or wine for that matter. And I listed changing sales channels. That's a challenge as well, whether it be consolidation of a distributor or a movement or a move within the winery itself to go more to direct to consumer and try to figure out how to better your situation with that program. Retail pressure, a lot of times, there's not only pressure from other brands, but there's retail pressure perhaps to keep the price the same or maybe even lower price. And then there's disasters. We've had 2 weeks of flooding. We've had fires every year, basically for the last 5 years. I mean, to handle a disaster at any moment is certainly one of the biggest challenges. Wineries repositioning brands, do they raise bottle pricing to hold margin? Do they lower their sales projections? Do they expand appellations or vintages? I mean, these are questions that wineries are facing. We mentioned earlier, wineries making a change from premium coastal programs to premium California appellations. I think we will see more of that. I think that'll continue. There will be some programs raising price, but that's a challenge. That's a difficult thing to do. So a lot of times there's pushback from the retail side, so that's difficult. The big question, case good sales moving forward, will it be continued softening or will there be a bounce back? And how do you capture that new wine lover? I mentioned that the entry level wine consumer, usually looking for that lower priced bottle. There's competition from other spirits, from other alcohol products, even more so now. When you see that equivalent price point of $6 to $8 dollars a bottle, and you see the beer on the shelf, and you see the seltzers, and you see the ready to drink products, there's a lot of competition. The industry is always anxiously waiting for more sales growth. But as generations get older and wine drinking habits change, this will be challenging. The younger consumer has choices outside of wine. They seem to be more aware of environmentally friendly products and more drawn to them, the products and the marketing of those products. I think we'll expect to see much more products that are sustainable. I mean, that's going to become more and more popular and evident. More and more products that are organically grown. You're going to keep hearing the term low intervention wines. I know there's a lot of pushback in the industry sometimes about natural wines, but these are wines that the younger consumer are interested in. They're interested in what's on the label, in terms of ingredients. They want to see cleaner products. This is how they've grown up, and it's something that I think we're going to see more of, to get that consumer. And with that, I think I'm done. It looks like it. If you wanted to, we do have some monthly reports. If you wanted to take a look at those, they're on our website. But that's my presentation. So Kim, I guess I go back to you.
Thank you, Greg and Johnny. That was very informative. Just a quick reminder to everybody, in case you're not already asking your questions in the live chat, please do that. Greg and Johnny are here to answer your questions. And I actually have a couple of questions too that I was hoping you can give your educated guesses on. We've been sort of looking ahead at a possible recession coming for some time now. Now, if the recession is coming and when it comes, do you have an educated guess on how that's going to affect the market based on what we've seen recessions do to the grape and bulk market in the past?
John, if you want, I can jump on that one first. I mean, historically speaking, recessions have caused people to trade down into the wine segment, within the wine segment, and trade, down closer towards the value end, kind of reversing the premiumization process. I think it's a big question right now if that will happen again this time around. I think the question is at the lower end of the price spectrum, will we have people trading back into value wine, or will they be trading out of wine into other alcoholic beverages or other products? That's the big concern today, I think, is that we can't really count on, okay, here comes the recession, we're going to see more volume sold at the lower end of the pricing spectrum. So I'm hoping that's the case. I'm hoping that with if there is a recession, that people stay in wine and just trade shelves on where they're purchasing. But I think that's the big concern this year, and that's what remains to be seen.
Okay. Another big issue that also we've been looking at for some time is climate change and how that will affect growing and perhaps grape varieties grown. Is that something that you are seeing a change in what's being planted and what's being sold and in varieties based on where climate change affects?
Planting grapes isn't obviously, and growing grapes from new plantings isn't immediate. It's not an immediate event. It takes 3 years for a grapevine to start producing, that sort of thing. So it's really difficult to test that. Now, that being said, there certainly is our discussions, and there's not a lot of planting going on overall to begin with, just because of the rising costs of all the inputs to plant a vineyard: steel, the irrigation system, the cost of land. But that being said, there is definite interest in warmer climate, for instance, varietals. I know a lot of growers in California have looked in warmer areas around the world to see what's done well. Varieties that maybe come out of dormancy a little later. There's certainly, that is a concern. Yeah.
Now you looked a lot at the big five, which of course is a big chunk of the market. If we look down the line at some of the more niche things, are there any notable trends there? How about rosé? Is that something we're seeing a growth trend in still?
I don't know that we're seeing a growth trend anymore. I mean, I think we did see we had a pretty strong spike going back a few years, especially from Provence. But we're not seeing the kind of demand for that we once were. There was a time when all of our customers were saying, "How do I get my hands on some bulk Provence rosé?" Because this thing's really moving. We don't feel that so much right now. I'm not getting a lot, certainly on the international side, we're not seeing a lot of demand so much for that. Some of the smaller countries, New Zealand continues to be really strong. It's not a huge growing region, but what they do with Sauvignon Blanc there and how they've marketed it and globally, not just here, that continues to be a very, very strong market and with a lot of growth. So yeah, from a smaller perspective, that's the one that kind of that steps out to me as being kind of the one of the success stories of one of the smaller regions.
Very good. Speaking of smaller, for smaller wineries, do you have any advice for how they can take advantage of the bulk market? Say you're, in the range of under 300 gallons. Is there a difference in if you're a small like that to take advantage of the bulk market option?
Well, for a smaller producer, there's a lot of options. It's certainly easier to create a program and to maintain a program when your volumes are smaller. Sometimes like what we were talking about earlier, Sonoma Chardonnay being in big demand, but there's low inventory. For somebody that's got a smaller program, that's a little easier to make a purchase, although the price will be affected by that, but it's easier to buy a smaller amount of volume as opposed to a larger one.
Very good. Okay, we are getting close to running out of time here, but I do want to say thank you to you guys again for bringing your insights. And if you have any last comments or want to make a bold prediction about what the market's going to look like next coming year, let us know now.
Johnny, you want to go first?
Yeah, I'll let you go first, Greg.
Oh, okay. Look, I hate making bold predictions. I think a lot of what we've talked about in the past is, and what we look at, it's all been really supply side. I mean, when we look at the markets going up and down, for the last, I don't know, almost 30 years, we've kind of had steady growth in wine sales in this country. And so where the bulk market went was much more of a function of what the supply side was doing. This is kind of a new world for us as we watch demand either flatten or go into a little bit of decline. We can't just easily say the market's going to go one way or another based on the size of the California crop or the world crop. So right now, I'm really hopeful that our wine marketers out there are coming up with new ways to reach consumers and get consumers interested in wine and finding ways to promote all the health benefits that we've always talked about with wine within with what we're allowed to say, but talking about this product that we have that's it's a natural product that's been around for a long time, and there's a lot more to it than how much alcohol's in it or how many calories are in it, which that's kind of what we're competing against right now, are some of these other types of products that maybe don't have the history and all the the romance that we can promote. I'm just hoping that we can get our demand kind of back going in the right direction again. It would make all of us sleep a lot better. Right? I think if we could do that, because I do think, I still believe wine's a great product and something that when people are introduced to it and start to understand more about it, they once they're with it, they realize it's much more than just a beverage. So that's my final thought.
Thank you, Greg.
Yeah, just to add to that, exactly what Greg said. I think this isn't necessarily a bold prediction, but I think you're going to continue to see more programs that are, like I mentioned in the presentation, they're organically grown. Certainly, sustainable is becoming almost the norm now. to a certain extent, and then some of these lower intervention wines and the lower alcohol wines. I mean, that is a segment that is growing and continue to grow. That really, didn't exist a few years ago, and all of a sudden that's a big segment of the industry, and I think that's going to continue to grow, and maybe I don't know. It will definitely continue to grow. Yeah.
Excellent. Thank you, Johnny. Thank you, Greg. And thank you all of you who listened in to this conversation.
Thank you very much.
Thank you.
It's a pleasure.